All right, on that note, let's just get to Kevin Green, who joins me now for a snapshot and a look across some of the main stories. Obviously, we've got Microsoft reporting earnings tomorrow, but the stock has popped this morning, as I mentioned, after announcing a new pact with OpenAI. Talk us through what you're seeing there in the price action, KG.
Yeah, you are seeing a really nice move to the upside when it comes to Microsoft. Now, OpenAI actually has completed its recapitalization process here, which is kind of restructuring the company as a whole. And we are seeing some adjustments when it comes to Microsoft. So they are going to continue to have this exclusivity, especially when it comes to Azure, as well as the API connections, up until OpenAI is able to perfect AGI, if you will, or that's where you have some really interesting things that actually happens with artificial intelligence. But OpenAI is also contracted to purchase up to $250 billion worth of additional Azure services. That's also another reason. And you are also seeing Microsoft's investment valued at around $135 billion. So this kind of just restructures their deal that they have so far. It does kind of loosen some of the restrictions for OpenAI when it comes to working with other partners as well. Moving forward, that has been a point of contention, even so much so that we actually did see maybe some court filings around that particular issue. But it seems like this is now being moved behind us, and Microsoft is going to be a beneficiary, at least for the near term, when it comes to this relationship. So a nice little pop to the upside. OpenAI, once again, continuing to do deals. It seems like on a day-by-day basis, we get new reports out around partnerships or deals that they have with not only just cloud providers like Microsoft, but also some others in cross industries that have been able to kind of benefit from some of this enthusiasm. In fact, we did see, obviously, PayPal also moving higher today on the news regarding a partnership with OpenAI. So that's the reason why we're seeing the stock move higher here. I think in the near term, that obviously has been a bullish catalyst when it comes to information technology stocks and communication services stocks. But I think a lot of investors, as well as market observers, are going to be looking, the next 3 years, 4 years from now, if OpenAI is going to be able to kind of come through and follow through with a lot of these commitments that they've made through these companies, because they're very expensive and they obviously don't have the cash on the books in order to fulfill all of these as of right now.
As you say, a nice pop for Microsoft this morning. OpenAI continues to be a positive catalyst for these markets. We haven't got any sort of economic data to chew on coming out of the government because of that shutdown, but we did get some ADP employment data this morning. I'm also looking at the Conference Board's website. It does actually say to me that it's either overloaded or under maintenance right now, so I'm not actually seeing those numbers, but I'm just wondering what you're seeing. Maybe because we're not getting any government data, everyone's looking at the Conference Board as overloading the website. I don't know, maybe it's just my internet, KG, but what are you seeing?
No, I would agree with you. Obviously, we don't have a lot of economic data coming from the government, so there's a lot of demand when it comes to consumer confidence data or just privatized data in general. Let's talk about consumer confidence really quick, because I do have the number, even though the full report is still kind of under maintenance at this point in time. But it did come in better than the street's expectations, coming in at 94.6. Street was looking for 93.4, so an improvement. And we also saw a revision to the upside for last month's number. Previously, it was 94.2. It got revised higher to 95.6. There's definitely a couple of different factors when you're looking at that consumer confidence number itself. There's also an equity component. So as the S&P 500 kind of moves a little bit higher, that also can actually impact that consumer confidence data just in general. And when you're looking at ADP is now releasing a new type of data set on a weekly basis. This is something that's been available for the Federal Reserve, but they just recently suspended this, giving this data to the Federal Reserve, and it seems like they're now going to publicize this on a weekly basis. So on Tuesdays at 8:15 a.m. Eastern time, they're going to publish their weekly U.S. payroll data. And this is really just going to show the average of jobs being created on a 4-week basis. So if you're looking at this first report of this latest reading, it showed that 14,250 jobs in the last 4 weeks ending in October 11th were actually added. So this is just another barometer for us to be able to check the health of the employment picture in the United States here. And we'll, as we kind of get more of this data, we'll be able to kind of normalize it to say the least here. But we are seeing maybe the private sector trying to expand or give additional access to their data in this blackout type of vacuum that we've seen because of the government shutdown.
You've seen a lot of these sort of alternative data prints taking a sort of a disproportionately larger amount of, significance because of the fact that we've had a lack of what Powell calls the gold standard official data. But you just wonder in this sort of a paradigm shift that we're seeing whether, it will indeed take on a much sort of greater role here because of the fact that we've had to rely on it so much. What else are you seeing out there? Richmond Fed data there?
Richmond Fed actually did come in better than the street's expectations, still in the negative, so coming in at -4 for the index. Street was looking for -11, and the previous print was -17, so we are seeing an improvement there. When you're looking at manufacturing shipments, that was actually in the positive, coming in at a +4 number there, previously -20. So it's still showing the trend that shipments, for the most part, domestically here in the United States, are actually catching a little bit of traction. Maybe international shipments have been kind of lackluster, but it does appear that we are seeing maybe some domestic demand because of the tariff picture that has been taking place here. Maybe suppliers and manufacturers are looking at in-house producers, if you will, in order to do business. So we are seeing an improvement there. Richmond Fed numbers really don't impact the market that much, but it is a pretty decent gauge as to the health of the manufacturing economy, especially when you're looking at the East Coast. And outside of that, I'm actually just looking at the crude oil markets. We have been focusing on oil. We did see it catch actually a pretty decent bid over the last couple of trading sessions, but now it has kind of stabilized a bit and has hit a key area of resistance of that 50-day moving average, which has been an area of resistance for crude pretty much since the beginning of August. So we have seen a little bit of a fading here. It's coming on the backs of reports that India is kind of pulling back on its imports of Russian oil, or at least the refiners in India are kind of holding off for now. But there is also this belief that the sanctions on Russia are going to be a little bit more watered down than probably what was actually announced initially a couple of days ago, which is why you're seeing this unwinding of maybe some of the bullish intentions within the crude oil market just in general. And then there's also a fear that OPEC could actually look at this opportunity to actually increase production quotas as well to try to meet any type of deficits that we might see from the impacts of these sanctions on Russian oil and the disruption that we could see, especially in East Asia markets.
Yeah, as you say, I just seen a Reuters report suggesting that their sources are sort of out suggesting that OPEC Plus could actually look towards another modest output boost in December as well. So I suppose that is very much keeping things in check too, and no doubt traders keeping an eye on that news flow. KG, thank you so much for getting us across those key stories this morning for us and all the data.